the way, I have been to Bitcoin conferences before, so they do invite me once in a while just to kind of counterbalance all the hysteria. But anyway, I'm going to talk about how I see blockchain helping to reintroduce gold into a monetary system that is in desperate need of a major overhaul. Because I think the world is on the verge of a monetary upheaval, because the current monetary system is based largely on the US dollar. And the problem is that ever since 1971, the US dollar has been based on nothing. Prior to 1971, the dollar was gold. In fact, the dollar was legally defined as a weight of gold. That's really what a dollar was, a unit of measure for gold. And before 1971, or before Bretton Woods, before the dollar became the reserve currency, gold was the reserve for every currency. Gold was real money, and then you had a currency that derived its value from the real money, the gold, that backed it up. But with Bretton Woods, what happened was the United States was able to convince the other nations of the world to back their currency by dollars as opposed to gold, because the dollar was itself backed by gold. And the Federal Reserve notes that the world was holding were actually IOUs for gold. And so on that basis, the world accepted the dollar because it was as good as gold, but it was better because gold didn't throw off any interest. But what the world was able to do with their Federal Reserve notes was buy US Treasuries and get interest, but they were getting interest on their gold because they could take those Federal Reserve notes back to the United States and get initially 35, for every 35 Federal Reserve notes, they got an ounce of gold. And so you had that stability behind the money. Now, what happened in 1971 is we defaulted on that promise. And recently there's been a lot of talk about the US defaulting on the debt if we didn't raise the debt ceiling. And the discussion was always, well, America has never defaulted. Well, that's not true. We did default in 1971. We defaulted on our obligation to redeem our notes in real money, because Federal Reserve notes were obligations to pay gold. And when you tell your creditors, we're not going to pay you what we told you, we're going to give you nothing for your notes, that is a default. So we defaulted in 1971, and so the world has been operating on a fiat system where one fiat currency is backed by another fiat currency, but ultimately there's nothing backing up the entire system. And once the United States was given this exorbitant privilege of being able to create a reserve currency out of thin air, we abused that privilege to the point where we now have a $31.5 trillion national debt. As I'm speaking now, we're in the process of suspending the debt ceiling so that it could rise dramatically in the next several years. In fact, right now, the United States is running annual budget deficits in excess of $2 trillion a year, which is an enormous number. At the same time, our trade deficits exceed $1 trillion a year. We just had a merchandise trade deficit, came out last week, is almost $100 billion in a single month. That's how dysfunctional the American economy has become under this system, because the ability to create the reserve currency out of thin air means that Americans don't have to produce in order to consume. All we have to do is produce money, just print paper, and we could exchange that for the goods that the rest of the world produces. And that enables Americans to live beyond their means. But the only reason that can happen is because the rest of the world collectively lives beneath its means in order to subsidize the extravagant standard of living of Americans. And as a result of this, we have this massive economic imbalance. We have a huge bubble. And I think the whole thing is about to burst, because inflation is now a worldwide problem. It's been a problem for many, many years, especially here in the UK. The Bank of England, along with a lot of other central banks, has been deliberately creating inflation for years under the pretense that we didn't have enough. And so now obviously we have much too much. And I think this entire system is breaking down. I think the inflation that we're experiencing now is just the tip of a huge iceberg and is ultimately going to lead to a destruction of the current monetary system where the dollar loses its role as the reserve currency. And that has major implications for the world. But what is going to replace it? Because a lot of people are jumping to the wrong conclusion that the dollar's role is not in jeopardy because there's no other currency that could take its place. That the euro won't work, that the yen, the Chinese RMB. And in that respect, that's true. Not that the dollar is any better than those currencies, but those currencies aren't inherently any better than the dollar because none of them are backed by anything. Yes, at least, Europe has a trade surplus, I think, in totality. So that is better than the United States with a massive trade deficit. But I don't think the world is ready to base its monetary system on the euro. And of course, if the European Union had that privilege, it would abuse it the same way the United States does. What everybody is overlooking is the obvious, because the dollar didn't really replace another currency. It replaced money. It replaced gold. And so I think the future isn't another fiat currency to replace the dollar. It is gold replacing the dollar as the primary monetary reserve. And one way that that could be introduced is through the private sector, probably even before the government, through blockchain. Because the private sector came up with paper money before the governments did. Banknotes were issued by private banks. In fact, before the banks were issuing banknotes, you had the goldsmith. The goldsmith would hold on to gold, and the people who owned the gold would get a note from the goldsmith that represented ownership of gold. But then those notes could circulate as a medium of exchange because everybody knew that whenever they wanted the gold, they could take that piece of paper back to the goldsmith and get it. So you didn't have to conduct your commerce in the actual gold. The gold could sit in the vault, and you can conduct your commerce in paper. Well, with the internet, with blockchain, there is a major improvement on the functionality of gold to act as a medium of exchange and as a unit of account. I mean, the role of gold as a store of value, right, that doesn't change. Doesn't matter where you're storing it. But in order to be money, it's not simply that you want to be a store of value. And a store of value is also important so that you can make loans, so you can have a deferred payment. You need to be able to borrow money. You need to be able to loan money. You need to be able to have insurance policies denominated in money. So you have to have a store of value, but you also need something that's easy to conduct commerce with. With the internet, with blockchain, it's never been easier because I don't have to physically be in the same room or even in the same country in order to transact. Now, when Bitcoin originally came on the scene, the selling point of Bitcoin was that, well, Bitcoin is more liquid than gold because it's easier to use it as a medium of exchange. Like they would say, well, you can't buy a cup of coffee with gold, but you can buy a cup of coffee with Bitcoin. Well, you really can't buy a cup of coffee with Bitcoin because that cup of coffee is going to be very expensive if you actually pay for it with Bitcoin. And the other problem is you can't price coffee in Bitcoin because no one knows what Bitcoin is going to buy in terms of coffee. From hour to hour, day to day, it's too volatile to be a medium of exchange or a unit of account. It's too expensive to be a medium of exchange. And it can never be a store of value because it doesn't have any value. It has a price. Bitcoin has a price. I mean, you could check the price every day, but it doesn't have any value. It's just worth what somebody is willing to pay for it. That's a big difference between Bitcoin and gold, is gold has actual value because it's a metal, it's a commodity, and we know all the various use cases for gold. But when you marry it to the blockchain, you now have a monetary system that is far more efficient than the monetary system that the world had prior to going off the gold standard in 1971, because we know that gold can function as money because it's functioned as money for thousands of years. Bitcoin has never functioned as money. It's been around for about 10 years or so, 12 years, but during that entire time, it simply functioned as a trading token. It's a digital asset. I call it like a collectible. People collect them, they trade them, but they're not used as money. They can't be used as money. But gold, when you combine it with blockchain, that is gold 2.0. Because all of the qualities that the proponents of Bitcoin attributed to Bitcoin, you actually have with gold when you have it as a medium of exchange. And so the private sector, just like banks, issued currencies before governments did, right? The reason governments started using gold as money is because that was the money that was chosen by the public. That's what the public wanted. And so if the government wanted goods or services, it would have to pay for them with gold. If it wanted soldiers, it would have to pay those soldiers with gold, because if the soldiers wanted to eat, they needed gold to buy their food. So it was the private sector that invented gold as money. Governments just ultimately got involved. And once they created monopolies in fiat currency, they basically corrupted the entire system. And the solution is going to be the free market, I think, reintroducing a superior form of money. You know, there's a lot of competition now when you look at government-type monopolies, whether it's, you have taxi cabs, and then all of a sudden companies like Uber and Lyft come on the scene and try to compete with some of these government-run monopolies. Or in the United States, you have the post office, but then you have companies like FedEx, DHL come up and they want to compete with government monopolies. Well, the biggest government monopoly is in money, in fiat currencies. But the money that the governments provide is not good quality because it doesn't retain its value by design. In fact, all these central bankers today will tell you that their goal is for their currency to lose value every single year. What do they say? We have a 2% inflation target. That means they're telling you that the money that you're using is going to lose 2% of its purchasing power every year by design. But the problem is they can't even hold it to 2%. It's more likely that government currencies are going to lose 4%, 5%, 8%, 10% of their value every single year. So they can't function as a store of value, especially as we move forward, and governments like the United States, but also in the European Union, also in the UK, politicians have made all sorts of commitments to voters that they don't have the tax base to fulfill legitimately. And so the increase in the supply of fiat currencies, inflation, is going to accelerate. And so the value of all these fiat currencies is going to diminish. And so individuals are going to be looking for alternatives to a failed government-run fiat monetary system. And those solutions can be provided today more efficiently than they could in the past. Because if you take gold and you have various companies, reliable companies that can store that gold, and I know a lot of people in the Bitcoin community, what they don't like about the idea of having a tokenized gold and having gold or digital currencies backed by gold is they say, well, you have to trust the counterparty. Well, sure, that's what capitalism is all about. You always trust counterparties. Anybody that has an insurance policy, it's only as good as your counterparty. People have life insurance, auto insurance, fire insurance. You have to trust the counterparty. In a free market, there are all sorts of mechanisms to validate that trust. And in a free market, companies compete with one another for goodwill. You take a company like Brinks, which has been in the business of storing and transporting gold for, 150 years. They've never lost an ounce. And that's part of their brand. They promote that. That's the goodwill that, hey, you can trust us with your gold because we've never failed. Nobody has ever lost an ounce of gold. And so you will have in the private sector companies, and then probably governments too eventually, that will compete with one another on who is the most reliable storehouse of gold. And then the digital currencies that are backed by reliable stores of the gold, those are the brands that are gonna be more popular and more marketable. Because ultimately, I think what's going to drive the use case for real money on blockchain is not gonna be the consumer. Because as but somebody who wants to buy, Gresham's law, good money, bad money chases out good money. I don't want to go out and buy something and pay for it with my gold. I want to pay for it with paper because the paper is going to depreciate. Why would I want to pay with gold? I want to hold the gold as a store of value. I want to get rid of my dollars. What's going to ultimately drive a movement towards an alternative is going to be the sellers of goods and services who want to be paid for those goods and services in real money. They're not going to want to risk selling something and accepting a fiat currency in exchange if the value of that currency is eroding away too rapidly. I mean, right now, when you were looking at prices going up 2% a year or something like that, it wasn't that dramatic, and people were able to conduct business and plan for that amount of inflation. But as the inflation rates get higher and higher, it becomes more and more difficult for businesses to operate, especially if you're selling merchandise and then the cost of the merchandise that you're selling goes way up after you sold it and you have to replace it, and you don't know that you have the ability to do that in a depreciating currency. That's why if you look at a lot of countries, let's say in South America, where they have historically high rates of inflation, you have big underground economies where a lot of the merchants are selling for US dollars or they're selling for euros. They don't want the local currency because the local currency is not a reliable store of value. Well, soon these major fiat currencies, especially the US dollar, they're not going to be a reliable store of value either. So the market is going to be looking for alternatives. And when it comes to using gold on the blockchain, a lot of people will say, well, I can't send my gold, right? If I'm in the United States and I want to buy something on the internet and I want to conduct business with a company in the UK or a company in Australia, I can't send them my gold. I don't have to send the actual gold. All I have to do is send the ownership of that gold. Why do I have to send the gold? What's important is the evidence of ownership, because just like the olden days where you had your gold with a blacksmith, or when you had your gold at a bank and you had a note, right, from that bank that represented gold that was stored in that bank's vault, every time I wanted to buy something, I didn't have to run down to the bank and get my gold. I just gave somebody the note. And the note was a reliable proof of ownership. And the person I was transacting with, he'd rather have the note. He didn't want to go down and get the gold either. He just wanted something that evidenced that he owned that gold so that he can then use it to buy something else. Because when you're using gold for money, nobody wants the gold to use it. I mean, they're not jewelers. They're not going to make a ring out of it or something like that. They want it to use it to buy something else. That's the definition really of money. You don't want the money because you want to use the commodity. You just want to use it to acquire something else. So it's a lot easier to do that with the money substitute. That's why currency is called a money substitute, because it can substitute for money, but it derives its value from the money that backs it up. Fiat currency has no value, but real currency does. And the same thing with the blockchain, only better. Before, when you had a paper currency, you had to be able to authenticate the legitimacy of that banknote. Was it actually a note of that bank? Because what gave it value was the fact that there was gold. But if you had a counterfeit note that wasn't really from that bank, well, then it wasn't worth anything. But today with blockchain, it's so much easier for somebody who accepts payment in a digital currency backed by gold to authenticate the legitimacy of that digital currency. So everything that worked with a paper monetary system before we had the internet, before we had blockchain, will work even better now. So instead of the crypto community trying to reinvent the wheel and trying to say that Bitcoin is gold, when Bitcoin doesn't have any of the properties that made gold desirable as money. Bitcoin was able to counterfeit some of the properties that made gold better money than other commodities, whether it's the divisibility, the fungibility, the portability, but none of those attributes would have mattered but for the intrinsic value of the metal itself. The fact that gold was a highly desirable metal. You know, I hear all this nonsense in the crypto community that gold has no value, that gold has no use. It's the most useful metal on the periodic table. I mean, everything pretty much would be made out of gold if they could afford it. You know, most metals are substituted for gold because gold is too expensive. But gold has very unique properties that give it value. And one of the reasons that gold is such a good store of value is, unlike most commodities, gold doesn't decay. It doesn't tarnish. It doesn't lose any of its properties over the centuries. Any gold that you have now, is going to be around. And in fact, gold could be reused an infinite number of times. Whatever you do with gold, if you do use gold and make it into a jewelry, you can melt it down and then you could use it all over again. You haven't diminished any of its properties. So when you own gold and you have it in a vault, you are storing the use of gold for the rest of time. Because even if you're not using the gold, somebody will. And you're just storing that potential. But with something like Bitcoin, you're not storing anything because it just has a price. The only reason somebody wants Bitcoin is because they think the price is going to go up. And you can't have a monetary system based on that. You have to have a monetary system based on actual money, the definition of money being the most marketable commodity. That's what gold is. But with blockchain, gold is even more marketable today than it's ever been. And so that's where all of the effort should be. How do we use blockchain to reintroduce gold? Because the reason that the governments got us away from gold is because government fiat currency was more efficient to use. Like I mentioned earlier, they said, well, you can't buy gold coffee with gold, right? People would say, you're gonna take your bar of gold and you're gonna shave off a little bit of gold. Well, even when we were on a gold standard, you didn't use gold to buy coffee. You used another metal. You used copper, right? And we used pennies because you couldn't take gold and use it to buy something as inexpensive as a cup of coffee. But today you can. That is the beauty of a monetary system, on a blockchain, is I can take a tiny piece of gold and use it to buy a cup of coffee. And that transaction could be effected at a fraction of the cost of transferring Bitcoin and in a reliable manner. Because if I am a barista and I want to sell my coffee, I can price it in gold. Doesn't matter what the price is in dollars or pounds or euros. And in fact, in a global economy, and the world is probably more globalized now because it's easier for people all around the world to transact with one another, why aren't we transacting in one common form of money? And that common money can be gold. Everybody can know what the price of gold is. And so merchants, who are selling online can price their products in gold, in grams of gold, in fractions of a gram of gold. So everybody looks at the exact same price and everybody can affect these transactions to a tiny amount because the blockchain can keep track. You could take 1 ounce of gold and you could break it up into 100,000 tiny little pieces. And you could spend those. So it makes it very efficient. You don't need to use nickel. You don't need to use copper, silver even. You can transact everything from the smallest purchase to a large transaction. You can do it all with gold, provided that you're doing it digitally on a blockchain. But anyway, I'm noticing now that I'm running out of time, so I'll end it there. And we're gonna be taking some Q&A. So thanks, everybody.
Thank you, Peter. Brilliant way for kicking off day 3, so thank you. Great to hear from you how blockchain can take the gold standard to a whole new level. Now, like I mentioned before Peter came out on stage, it's Q&A time. So, yes, you ready?
All right, yeah.
I'm going to throw it out to the audience first. So, if you want to raise your hands when you've got a question. Got an eager beaver over there.
Hi, I'm Philip Schnell. So, Peter, you are a little bit of a legend, in this space. You spend a lot of time arguing, debating with Bitcoiners, or so you think. We call them BTCers to differentiate, and rest assured, we think they are as ridiculous as you often point out. So with us here, representing mostly Bitcoin SV, do you think there is a more symbiotic, a more value-adding future for us ahead?
Well, I have a lot in common with some of the, maybe, Bitcoin maximalists in our thinking about the economy, about central banks, about the need to come up with alternatives to the current monetary system, which just is a disaster in the making. And as I mentioned earlier, that we had this big discussion about the debt ceiling and whether or not the U.S. will default. Default is inevitable, right? And no government that issues debt in its own currency ever has to default because they could just print. But that's the problem. You print until the currency has no value. And we need an alternative. I just think that the people in Bitcoin, they're jumping from the frying pan into the fire. Just because the dollar is bad or the euro is bad doesn't mean Bitcoin is any better. I think that people that got into Bitcoin early on made a lot of money, but they made a lot of money because other people were dumb enough to pay ridiculous prices for the Bitcoin they bought early on. But you can't confuse that. Just because you had a big bubble doesn't mean your underlying premise was right. It just means that other people bought into that idea. But ultimately, the whole thing has to collapse. So I don't think the people that are in Bitcoin at the end of the day are going to have anything to show for their paper profits if they don't get out. I mean, yeah, you have an opportunity. Bitcoin is, what is it, $27,000, $28,000. I mean, you could sell and walk away with a lot of money. You could buy a lot of gold if you sell your Bitcoin now. But obviously, somebody is buying it from you. That person is stuck, right? That person is going to lose. The only way you make money in Bitcoin is to find someone dumb enough to buy yours. But then that guy is stuck with it unless he could find somebody else to buy it. Yeah.
Brilliant question. I'm going to go to a virtual one next, and then we'll come to you, I promise. Do you see digital gold as an alternative to CBDCs, or can they coexist, meaning that a CBDC would be backed by digital gold?
Well, most of these central bank digital currencies that are being contemplated are no better than the paper currencies that already circulate. Governments are not talking about backing their digital currencies with anything. It's just going to be more fiat. The problem, though, that I have is from a civil libertarian perspective. I don't like the additional power that governments have in that system, in that they are able to have much greater surveillance over all of the citizens and know exactly what everybody is doing, what everybody is buying. And you don't want government to have that much power. And it's not because I'm trying to protect the criminal. I'm trying to protect the honest citizen from a criminal government. I mean, the more power you give to government, the more likely they are to abuse that power. And if they can micromanage and control us to that degree where you no longer have the ability to conduct commerce, in a private manner. And again, you don't have to be a criminal not to want the government to know everything that you're doing, especially if the government itself becomes criminal and you're trying to, get the government to abide by the law, and the government is trying to put that down, right? Because all criminal governments want to try to protect against any kind of, rebellion from the citizens. And so when the government has all that power, it even makes it more likely that the power gets abused to the point where you really have to worry about individual liberty. And I also don't like the power it gives to central banks, because I think central banks will be able to do even more damage because I think they'll be able to try to micromanage money supply to an even greater degree if they can do it, through a digital currency. And so I think that it is a dangerous path that we're going on. On the other hand, if a government were to issue a digital currency backed by gold, right, like I'm discussing, then that's a whole different thing. And also, they can't issue the digital currency and eliminate the paper currency. You have to have the ability to transact in either a form. So I don't want to see the banknotes or the paper currency withdrawn. I just want to see it backed up by real money. But let individuals decide how they want to conduct their commerce. Do they want to conduct it with a paper bill, or do they want to do it electronically?
All right, we've only got 4 minutes left on the timer, so I'm going to take a question from the audience. Let's try and, I know you've got a lot to say. Let's try and get a couple of questions in. I feel like you could keep going and going.
Yeah, thank you. Peter, I'm from India. I want to compliment you of your lecture, whatever you have told. And the impression given by you is this Bitcoin have all the properties of the old money. And I want to know, like, when you issue a cryptocurrency, Bitcoin or anything based on crypto, so it is traceable. Actually, though they say it is anonymous, but according to me, it is traceable. So the cash actually is not supposed to be traceable, actually. It has to be anonymous. So like our Reserve Bank, actually, CBDC, they are trying to create through using crypto, but they say it will not be traceable. So how it is possible? And especially some bank, central bank, want the cryptocurrency also to be issued and maybe backed by gold, but they also want to trace it, actually.
Yeah, I mean,
so they want to have both the things.
Ideally, it would be better if you can issue a bearer form of a digital currency that wasn't tracked and traceable. But unfortunately, the governments today don't want that. They don't want people to be able to engage in commerce anonymously, mainly because the taxes are so high throughout the world that governments want to make sure that people are paying taxes. Now, of course, the ruse is that they're looking to try to combat terrorism, drug dealers, money launderers, but that's just a smokescreen. The real concern of governments is law-abiding people, not paying their taxes. And so the big problem that you have now for private companies that want to do what I'm talking about is the regulatory burden, because it costs so much money to be in compliant with anti-money laundering laws and maybe even security laws, to the extent that governments try to define an asset backed by a cryptocurrency incorrectly as a security. Now you have a whole other set of government regulations. See, government doesn't like competition, and they use their power to try to thwart competition. And there's no question that they're going to do that when it comes to money. Because when gold circulated as money, most governments back then, taxes were very low. I mean, there were no income taxes. I mean, income tax is, a modern invention. I mean, when England was ruled by a king, no monarch would have imposed an income tax. There would have been a revolution, right? Nobody would stand for a tax that onerous. So if we had consumption-based taxes, which are far more, they're not as oppressive and they're a lot fairer, but it's also hard for governments to become enormous if they have to base all of their revenue on a sales tax or a VAT. But if we were using those systems, then it would be fine. We wouldn't need to have the ability to track everybody, because people wouldn't be evading their taxes. There'd be nothing to evade. So governments are going to erect these barriers, but it is possible, and I think with, AI and things like that, the cost of complying with these regulations will come down. There will be ways that the free market has to effectively spy on everybody and make sure that governments can get all the information they need on these transactions. But what the companies will be able to provide, though, is a better alternative to a government currency, and you have a reliable store of value.
Lucy, thank you. Lucy.
Okay, well, we've got to offer a question to Calvin.
I just like your definition of a perfect blockchain to use for a gold-backed digital token. What's your definition? or a perfect blockchain?
I don't know what a perfect blockchain. You have, various private blockchains, or you have these open ledgers. I mean, there are all sorts of ways that you can use, right, to tokenize gold, and then have the tokens represented on a blockchain. You don't even need a blockchain to do it. You can have a closed system, and you can still do it. The whole idea is just to make gold more portable, more divisible, more usable as a medium of exchange than it is in a bar form, in a physical form, or even in the form when it acted as the backing for a paper currency.
Can I just ask one more question?
Yeah.
Would a frictionless blockchain where the cost to send a fraction of a bar, whatever fraction size you want, from one person to another person, and it would be essentially free, would that be a good system?
Well, obviously, the lower the cost, the better. And so in a marketplace, when consumers are trying to decide which token they want to use, because anybody can take gold and tokenize it. I mean, it's not, no one has a monopoly on the technology. The question is, who is going to produce a currency that the market values, that the market trusts, and that people will want to accept as payment for whatever goods or services they're selling. And obviously, cost is going to be one of the variables. Whoever can do it at the lowest possible cost is going to have a bigger platform, because the lower the cost, the more money that's left for the buyer and seller. I mean, right now, a lot of merchants that deal with, let's say, a MasterCard or Visa, they could be giving up 2%, 3% of a transaction. And so if those merchants can be paid as easily in a cryptocurrency backed by gold, where they don't have to pay 2 or 3%, where they can pay a fraction of a percent, then obviously that's going to be a good alternative, especially as inflation accelerates and they have a lot more confidence in the value of that currency than their payments that are made through MasterCard or Visa.
Great questions there. All right, I'm feeling generous, guys. I'm going to have one more question. And I believe you've already got the mic. All right, shoot.
Thank you. Hi, thanks, Peter Schiff. That was a great talk. So if I were to summarize in one question, would it be fair to say then, if there was a blockchain where it was very cheap, as cheap as possible to transact, such that everybody in the world could use it, and it would also promote transparency and accountability at the same time, and the only real use for that blockchain token would be to pay for these transactions, would that be the ideal blockchain to print gold-backed tokens on, such that everybody...
Yeah, it would certainly be one. I mean, again, no one's going to have a necessary monopoly on it. But obviously, the key is to be able to show that the gold is actually there, because what gives the token value is the gold. And that's also what limits the supply. If you could just create the tokens without having the gold to back it up, then you can inflate it away and you can diminish the value. But to the extent that you have to have gold behind each token. Now, of course, that doesn't mean that you couldn't have some type of fractional system for demand deposits where somebody could agree to lock up a deposit for a number of years, and then that currency could be loaned out. I mean, you could recreate the banking system just without government and without banks. And there is a natural fractional reserve system that exists in a free market, nothing like what we have today with government. Government has caused excessive leverage in the banking system based on its insured accounts and its regulation. But in a free market where gold is money and it is circulating as money through a cryptocurrency on a blockchain, the market will develop ways to act as a custodian of funds, so that people who have savings, who want to earn interest on their savings in real money, can put it with an institution who would generate that interest. But the way they generate the interest is by making a loan. You make a loan to a businessman, to an entrepreneur who is going to take that money and buy some capital equipment, make their business more efficient, and then repay the loan with interest, which enables the financial institution to then pay interest to the depositor. So we could disintermediate the entire banking system out from under the government and have a much sounder way for society to store its savings and then make those savings available to businesses to increase productivity, increase production, and drive rising living standards. I think that would be a much more efficient system than what we've got now, where nobody even has an incentive to save because the interest rates are lower than the inflation rate. And so everybody is spending and there is no real underconsumption, no legitimate savings, and we have just one asset bubble after another.
Thank you, and on that note, how can I say no to you? Go on then, one more. You've got to be quick though.
Peter, this is a fascinating topic and one that I'm sitting here, I'm looking at other meetings, but I couldn't leave. I feel like I'm sitting back in 2007. Back in those days, before the Bitcoin blockchain was launched, I had multiple, as a lot of people know, multiple discussions, trade, platforms. From a historical point of view, through that period, he spoke to me not once, but probably 20 times about how he could incorporate Bitcoin backed by gold. He had a number of schemes, a number of ways that he was trying to incorporate it. But as we know, when Bitcoin launched in January 2009, there was no gold. So for me, this is like traveling back in time, having those discussions about why gold would be and should be and must be an important part of this ecosystem. So thank you for the conversation. I just wanted to raise that for the audience.
In order for it to work, the currency has to be backed by something. It can't be backed by nothing because that makes it fiat. It doesn't matter if a government declares it fiat or the market, because what gives fiat currency its value, other than the fact that the government demands that you pay taxes in it and it's legal tender, but ultimately what gives it value is confidence. People just have to trust it. People just have to have confidence that in the future they'll be able to buy things with that currency. But when the confidence is lost, it doesn't matter if it's legal tender anymore. Nobody wants it, and you have hyperinflation. The currency just implodes. Gold is not based on trust. It's not based on confidence. It's just based on real. It's based on the real value of the metal. You don't have to trust anything. And when you look at Bitcoin, I think it's the ultimate in trust. You just have to trust that people are going to want it, right? And why do people want it today? Well, most people want it today because they think they're going to get rich. They think the price is going to go up. They think it's going to go to the moon and they're going to be able to buy a Lambo, right? But what happens when people no longer have that confidence that the price is going to keep going up? They want to sell. Nobody wants Bitcoin because they want Bitcoin. They want the Lambo, right? Or they want to buy a house. They want to travel, right? They're just hoping they can do all that in the future when the price of Bitcoin goes up. But when the people that hold Bitcoin, instead of being greedy and wanting to hoard it because they think they're going to get rich, when they start to get worried that they might go broke because they see the price going down and then people want to sell, well, if the mentality flips and if people expect the price to go down, then why would anybody want to buy it? And then it just implodes down to zero. So that's ultimately where we're going. And it's unfortunate, and I've said this from the beginning, that where Bitcoin might succeed is in making fiat currency look good. And what's ultimately going to happen is when a lot of people end up losing a lot of money in Bitcoin, just like they lost money, at FTX or some of these other, schemes that were out there, Celsius or a few of the other ones. But when a lot of people get wiped out in Bitcoin, you know what's going to happen? The government's going to come in and say, you see, we told you capitalism is no good. People get ripped off. People lost all their money. We need more government. We need bigger government. We need more regulations to protect people from things like these Bitcoin. So I think it's ultimately going to backfire. But what the community should be doing, instead of coming up with something that can't work, and that's a bigger fraud than the dollar or the euro, do something that does work, right? Compete with real money, right? Put gold on the blockchain, tokenize that, then you have something. The one thing you don't have is the pie in the sky fantasy of, becoming super rich, because you're not going to get rich with gold. You're not going to go broke with gold. It's a store of value. Now, I happen to think gold is underpriced right now, so it should be worth more than it is. So you can actually probably make a little bit in gold, but not the type of crazy things that people expect with Bitcoin. And a lot of people think that, well, look, people bought Bitcoin, for $1, $10, $20, and now it's 20,000. People think those type of returns are coming, that it's going to go from 20,000 to $1 million. And I still hear people talking about Bitcoin like it's a ground floor opportunity. Get in now. Ground floor? Who does it? Everybody knows about it. When I first learned about it, yeah, then maybe it was ground floor. I didn't buy into it, but at least then, hardly anybody knew about it. Everybody knows about it now. In fact, and I point to this, look at 2021. I've never seen a year with more hype than 2021 for Bitcoin. Right? You had all these conferences, you had advertisements on all these networks, you had Super Bowl ads, you had El Salvador coming in, you had NFTs, you had all this hype, all these celebrities coming out and endorsing all this stuff. Bitcoin went down. How is that possible? With all this hype and all this, how did the price go down? Because the people hyping it up were the ones that were selling. I think it was a giant pump and dump. And we still have a crash.
No, I'm putting my foot down now. No more. The red numbers are flashing at us.
All right.
Peter, thank you so much. I think you were well worth going over time for. You are a veritable fountain of knowledge. Thank you.
All right.
I'm sure you can catch him off stage.
BSV is more than another chaotic commodity craze. BSV blockchain can do more than just be a crypto investment. It can help you get more out of your games, share more of your art. BSV makes more things possible.